right, let's jump into it. Friday, end of the week. Where we are, 19th of the 9th of September, 10:43 a.m. So have a quick sort of look over stuff, and then look, covering yesterday's data. I did a video yesterday, just after we had that Aussie employment data out there. I'll get to the chart to sort of unpack that one a little bit because we saw an incredible little spike up later in the session and that with the Aussie. But really, in terms of data, it was pretty quiet overnight, except for a couple of pieces. And that we had BOE, which sort of held flat, which again, it's not really one that, even though it's part of the DXY, it doesn't really permeate out across the market and that so much. Maybe affects your GBP pairs a little bit, but nothing that really impacts sort of what I'm trading. The ones that were interesting to me were the unemployment claims and the Philly manufacturing index and that. So one by one, we got the unemployment claims, and remember we had that spike up last week. And this is the thing: while they're sort of talking about jobs, 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 and now we know that the market needs to sort of recalibrate the amount of sort of dollar short positions in that, because it's not just about the jobs, but jobs are still obviously part of the equation. The thing now is that it's not, look, they've got a dual mandate, but the way everything was being positioned was inflation's not on the radar, and that, even though we saw that tick up there a little bit previously. And of course, FOMC has changed that a little bit. I'll get to that with the charts. But on the jobs front, we saw this sort of spike up last week, and the market flew off this. Aussie was a big beneficiary of this number that came out last week. And the big question was, like I sort of said the other day, was this an outlier? Because I said this yesterday, that's sort of like, here we've got a big outlier, and then it sort of comes back down. Outlier comes back down. And this is what the market was kind of looking for, to have some sort of faith in the US dollar at the moment. And, we've seen that sort of springboard off the lows. There's a big negative divergence on the weekly, I'll get to in the chart. But this coming back down to 230 puts it back in that band. If we have a look at sort of where it's been previously, spiked, so drifted up to the 40s, sort of back in June. This is a weekly count, of course. Back down 30s, back in the 20s, teens, 20s, 20s, 30s, like this kind of area. And that's back, 231 is back into that zone. So I think that's a comfortable area where the market's not freaking out too much, because we saw the reaction with the market at 264, particularly while jobs were at the forefront. And this is the interesting thing with the data that, it's funny. You speak to people and they're like, "Can't you just make a bot or something?" Apart from the fact I don't know how to code, I could learn, but I'm not interested. But the thing is, you can't make it, because the same data can cause the market to react differently at different times. So more recently, we've been looking jobs, 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 and it's been super jobs sort of touchy, lack of a better word for it all. But the reaction to either positive, negative jobs data and that, more recently, because that's been at the forefront, that's the number one sort of number one kind of mandate, will give you a different reaction than when everybody's looking at inflation like they have for years and years and years. If you go back and have a look at some of these numbers, look, it's around that sort of low 20, low twos and that. But, while this is a big spike up kind of thing at the moment, when inflation is the main thing that they're looking at, jobs won't have as large a reaction. But, last week we were coming into the FOMC, we came off the back of ADP and NFP and JOLTS all looking sort of pretty bad, still feeding on from when Powell spoke at Jackson Hole, and he was saying the jobs were the thing that they were looking for. And so the market was very sort of touchy to this sort of number here. So jobs are obviously still a big factor. Like, I would say it's almost an even weighted sort of thing at the moment, just given the press conference after the FOMC the other day. But the fact that it came back down into that band makes the job side of the most recent outlook, which is obviously this one, which is a weekly, go, okay, it's not moving in the wrong direction. So that's not so bad. At the same time, we had the Philly sort of manufacturing numbers as well. This is an insane one. Now, this as well, you can see the size of the swings on this that we've seen previously. This thing, look, it's not something that I'm sort of like overly sort of like cover religiously, but these are incredible sort of swings with these numbers here. This is almost sort of like the RBA trying to sort of, the people sort of trying to predict the job numbers in Australia. They get nowhere near. You know what I mean? Like minus 1.2 comes in at 15. I mean, here we had 1.7, 23.2. So, it's two bits of positive bits of data off the back of possibly more a reduction in dollar short positions just due to that press conference and new outlook from Powell. So I think sort of like, these things combined, I think we could probably see a little bit more of a push up sort of with the US dollar, at least a couple of handles and that, and I'll get to that in the charts in a moment. BOJ is the main sort of one that we're looking at today. Of course, it's the tentative kind of thing. This, I think it's sort of like they say it's around 12 o'clock or 1 o'clock. You see these people and they sort of say, hey, look, out of the last 10 meetings, it's been between this time and that time or something. But generally, it's around 12, 1 o'clock Melbourne time. So about, what's that, sort of an hour, 2 hours or so kind of thing to sort of see how this moves. Most likely, that like, I would say pretty much guaranteed they're not going to move. See what they say with the press conference and that. I assume this is just going to be 30 minutes after this, like they are with all the other press conferences. But that'll be interesting because, again, markets somewhat sort of thinking that they are going to raise rates at some stage, which will strengthen the yen. But the BOJ is notoriously slow to be able to actually do anything. They talk and talk and talk. Yen strengthens. They do nothing. They say we're going to wait. Yen weakens. Yen plays a bigger role in movement within the DXY than the pound does. Actually, I'll see if I can find that differences. All right, so having a look here, actually, so there we go. That was the numbers from last night. This is the makeup of it here. And you can see actually percentage-wise, yen makes up 13.6%. You can see how strongly euro obviously is sort of correlated with it. But the pound actually makes up 11.9. So wow, I didn't realize these are all so low. I mean, the krona I'd never even trade. Swiss franc I don't trade. Canadian dollar I look at, but I don't trade. Pound don't trade. I know, excited going through one by one. But the point is that the yen seems to have a larger effect on the pound, and I would probably attribute that to the fact that the yen at its heart is also a safe haven currency. So it shares the same sort of characteristics as the US dollar does. Although, particularly last couple of years, BOJ has really destroyed that, and more recently we're seeing US dollar really be destroyed. But at their heart, if you sort of give them their characteristics, they're both safe haven currencies, and that's probably why you do see a little bit more movement with the yen, and it's probably a higher traded. I don't know if it is a higher traded currency. It's something to look into. Not relevant for right now, though. But anyway, this has the ability to have a little bit more of a movement, in my opinion, that can permeate it across the market. So we'll see how this one sort of comes out, but I would say that's probably pretty much a guaranteed hold through there. And finally, to finish it off, we actually have no data tonight. So this is the first Friday. I think next week we've got PCE, we've got a whole bunch of PMIs, all that kind of stuff. I'll get to over the weekend on the weekend analysis. But that's pretty much it in terms of data into the end of the week. So the question is, how much can this sort of thing hold? Where will the sort of US dollar finish? Now, if we look at this on a sort of weekly time frame here, we've got a big sort of negative divergence. It didn't sort of come down massively lower, but you can see the buying pressure here is still very strong. So it is a lower low with buying pressure moving up, which is technically, excuse me, a negative divergence. Negative divergence off this little support that's come through here. Yeah, it chopped through it once. But short of that, we have about sort of 6 connections to this bottom line down over here. So it does make it for a bit of a sort of bottoming area. And if we sort of think about it, like, everybody's sort of like short, based on the idea that we were going to get, potential, well, basically we were going to get cuts. I don't think anybody with a sound mind really thought it was going to be sort of 50 base point, but I have seen some calls for that kind of sort of stuff, but I don't know if that's necessarily the direction that they were going to go, and they obviously didn't. And even Powell said it wasn't really a consideration, other than that whatever his name was, the guy that just got appointed by Trump, which you could tell that this guy's going to sort of go, oh yeah, he's just been put in by Trump. Trump wants lower rates. Okay, yep, let's put in 50 base points. So no real sort of shocker with him. But short of that, across the thing, Powell said there was no real sort of conversation around the 50 basis point. So where to from here? This is on the weekly. We've got a decent bottoming. We've got a support. We've got a negative divergence. If this thing flips up, and look, it's not going to rocket necessarily, there's no big catalyst, there's no more drivers kind of thing. If it can flip up and sort of close above, say 98, back into this like little zone that it had over here, well, that's looking pretty good to potentially sort of carry on. Obviously, above sort of 98.8 here, above those wicks would be good, and then we've got another on at 99. So there's a couple of sort of like, it's not a clear-cut move through here, but we are starting to see potential signs of a bottoming on a weekly time frame. Now, this obviously could fail, come down here. If we close the week sort of sub 96.6, so let's just put a line under this one here. So that would be your little body across here. So if we close the week underneath 96.9 or so, this body down here, I would say that's not looking pretty good. Because again, look, it's come down here. We've seen, either shorts closing, people buying, whichever, whatever. It's pushing up. You want to see that momentum continue pushing up and sort of coming through. So we have sort of got a potential bottoming set up on the weekly. If you cut it down to the daily, we can see it a little bit clearer here as well. And, this is a couple of little lows that we had, or maybe this little low just here. I think I moved this one up. This one was technically down here before, but let's just put it there. I can say it's fucked from that point there. It did have a little bit of an issue here. If you look on the lower time frame, it sort of came up here, kissed the bottom side of this, and this is what you kind of, in my opinion, what you want to sort of see is like, okay, here's a support, broke through, that's fine. Here it's come up, it's tested it. Well, that's a logical place for anybody trying to sort of buy here for the idea that this would have held. They're like, nah, I can get up zero. So to me, that's respecting the chart, and that's fine. It's fine for these things to respect the chart. It shows that there's actually some sort of like um, method to the madness is the best word I can sort of come. I'm not feeling overly articulate this morning, but the point is, there's a structure, there's form to it all, and this is what you want to see. When it's just straight, like it doesn't respect anything, just goes melts down or cuts right through. That's generally a case of either stops being hit, emotional trading, people that get out at all costs, da 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 da. But once it's respecting the chart, you can see here, and this is what I cover all the time. Here's a support. Here's a support. First time back up, well, it's not a shocker, it's a resistance. But as you see, the second effort. Now, it's always in footy, they always used to say, it's the second effort. That's the one that counts. Same with trading here. Here's one effort, pulls back, second effort, bang, shot through. Shot through off the back of that data that we had, as I said, the Philly and also the job numbers. Market liked it, broke up through the top here. Now it's trying to hold here. It needs to hold this to sort of show that, they bought it here, they got out for nothing here. Hold on, wait, maybe it's worth getting back in. You want to see them buy this section here, and you want to see this continue to drive up. If we drag this across here, you can see it chopped. I don't like this level a great deal because it chopped through it so many times over here. But for the point of just going, that's interesting. That's the low here. We saw it sort of dance around it a little bit before it sort of came down here. It also became the thing. That's more just an interesting point. I'm not hanging my hat on that to sort of say, hey, look, that's the resistance that needs to break to sort of see us move on. I think this is more important here at the moment, holding this 97.3. Look, US dollar has just been an endless parade of disappointment, basically, trying to catch this thing. It's got all the sort of makeup at the moment to have a little bit of a move back up to 98, 99, these kind of levels, as I covered before in the weekly. But you need to see that momentum continue, and that's what I'm saying. If this can hold this support, we come up, we target 97.7, you break up through here. Because this is so choppy, there's so many, this is on the 4 hour as well, so choppy, there's so many levels you could go, oh, here's maybe the people getting out here, maybe the people getting out there. That's fine, but realistically, you want to sort of clear all these kind of wicks around here. If you get up over here, this is a bit more because as you can see how many times it came up to it, and smacked it down. This is all just chop, 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 chop through here. So again, this is that sort of trade going from a week ago, sort of thinking, hey, maybe they were going to run before the FOMC. They sure didn't. That's kind of the level you still want to sort of see it pop up. Like the idea that this thing just V-shapes up here, probably not going to happen. We've seen more V-shapes this year. I mean, here's a nice sort of V-shape through here. But the point is, it's sort of like we've seen more V-shapes this year on things than I've seen anyway. Buy the dip has been the strategy of anybody this year. And look, a lot of people have made a lot of money with it. But it's the same sort of thing in Bitcoin in 2020, 2017. When things just go in one direction and all you have to do is buy the dip, it works till it doesn't work. And that's what I'm sort of looking at to potentially feed the momentum of this move coming up here. Because people have just been so good at every single time sell it down, sell it down, sell it down. What happens when eventually they don't? And they don't just sort of sell it down, and they sort of put their stops above. Well, it feeds it. And then they go, okay, well, I'll short it again, put the stops above, and it feeds it. And it's just like feeding the beast basically as it sort of moves up higher. Sort of notice oops, not with the arrow. A little bit of a fall in resistance that seems to be holding through here. Let me just get back and clean this chart up a little bit because this is a weekly, isn't it? All right, so back to the 4 hour. So this is an interesting sort of little falling resistance we've got here. We've got 3 connections on it. I think that's probably better sort of than this horizontal through here as something. I mean, look, they both kind of still give you the same point. Get above that high. That's where we want to see it go above. So let's drag this one down here. Let's go boom. So above 97.6465, you're going to be running into some wicks again. As I said, it's very choppy. It's not going to come up through here easy. These ones, look, you could definitely sort of see some issues through here, but the main one you want to get above is 98.12 and then 98.8. That's your big sort of target. I don't think without a catalyst at the end of this week are we going to sort of see that. I've got to look to see. I mean, I'll do it over the weekend as to sort of what bigger bits of data. But we got PCE coming up next week. That's coming into the end of the week, and the week after that, then we have NFP again. So it's all ticking around very sort of quickly. And obviously, jobs are still part of the equation. So you'll see people in the sort of narrative and people talking, sort of shifting to that kind of stuff. That's fine. Look, we'll deal with that then. For now, let's get rid of all this stuff. Keep this a little bit cleaner. So what we're kind of looking at here is, yeah, as I said, a break above sort of, this 97, 60. You've still got wicks to deal with, so I don't think it's going to be an easy run, but that's the kind of direction you expect possibly this to come up over here. If it does break down underneath 97.25 through over here, then we're looking back down at 96.9, and yeah, on and on with this sort of kind of dribble down here. Does this give us anything? I don't really like that bottom line there. So that's the direction. We want to see this sort of continue up to the top side. Looking at Aussie with this as well, because this, as I said yesterday, sort of came off the high. These kind of tops are very reliable, where you've got the sort of dribble down, one little last hurrah comes up, takes out anybody that was first early into the stops, and takes them out, and then we see the continuation down. And look, it's coming off well. And we had that little sort of shoot down. You say this on the 4 hour, but you can see the data yesterday was where it was around here. Here it was here. We had that sort of negative print in the unemployment. Sorry, negative print in employment and then flat in unemployment. And we saw it continue back down. Again, US dollar is pretty much the driver of things at the moment. Yeah, the RBA is a factor in it, but if you have strong US dollar, doesn't really matter. Like it'll just slow down things if you have strong Aussie data. You're not going to sort of like buy the Aussie even with it strong data over a US dollar strength market. Like it's just not going to happen. So can we drag anything out of this? Yeah, we've got a little bit of a falling resistance here. Coming into this little zone here, I think sort of like, if we get underneath 66, with moving back down 66.80 or so, this is probably a reasonable target. I would be surprised if you don't get some sort of rally effort, some sort of rally effort soon. Just for the fact that, look, it has still been quite very bullish, and this is quite a sharp sell-off. So I think even with a sharp sell-off, you're going to hit a point where people are going, hey, look, you know what? I bought it at 67 cents. Geez, it got over 67. That's so high. 67. Now you've got a 100. What was that? 120 point discount. They'll give it a shot through here. So I don't expect this to just melt down straight down over here. But as I said, these kind of tops are very good sort of reversal top kind of things. So particularly if we do see US dollar can carry on, there's no reason that this can't also come back down to these levels underneath 65 also. Look, it's been a very tough trade, and this is what I'm talking about. People sort of doing their, I mean, we had a big double bottom through here, as you can see, that completed, and up to 67 and all this kind of thing. And buying the dip has just been, I'm a superstar, rock star trader. And that's what I mean, that sort of eventually I think this is going to sort of carry on to people, and I think they're going to start to get to a point where buy the dip doesn't work, and they keep trying it, and that's again, it's what will feed the beast, is it'll sort of carry through. So things won't carry on forever. Look, we could get a rally through here. It's a reasonable area. We know that around these sort of levels, it does try to sort of hold it a little bit. Have a look on the other one, see if we've got anything marked up. Look, that was the sort of call, the play to sort of come back down here. We're down here now. So there's a reason for why people may sort of go, hey, let's try and buy this up. We've got this sort of rising support coming through here as well. But as I said, if you get down to these levels, you could still see a rally. There's no doubt that you won't see some sort of buying effort. But if you get down here, that's what you got to look out for, a retest of that, and then sort of a breakthrough down that low. And that'll be the second effort that we're talking about. So I'll push down. If we take out the lows, go underneath 66, we're at 66.10 now. If we get underneath 66, move down to sort of 65.80, we know that the sort of 90s will always offer some sort of rally effort. It could be something like this, who knows? But the point is in that most of the time you will always see a rally effort through the 90s. It won't just chop through the first time. So around sort of 80 to 90, that kind of area, see a bit of a rally effort. But should you come through it a second time, that's when you're kind of breaking this momentum of this rally all the way up over here. You've got the top, you've got the US dollar sort of potentially running. That's when we could start to open it up to a little bit of a look a little bit lower, and we can start to sort of drag a fib over this move now. That's a decent enough pullback to sort of say that this move is looking where we're at. We're coming in around the 38% there as well. So look, there's a lot to sort of unpack with it. We can pretty much get rid of this one. We saw it went up to the 127 extension, but I would say a little bit of downside, then a rally potentially coming into the close of the week, and we'll have a look there. So how does it look on a weekly? I mean, that's particularly if we sort of close back down around that sort of underneath 66, it's not looking overly super positive. I mean, look, this thing has been an absolute nightmare to try and actually catch on the short side, but where are we at? That, should it come down to a endless sort of lines of all this sort of stuff. Yeah, let's get rid of this, get rid of this, get rid of this. That's one we just spoke about then. That's a negative divergence, and it's quite a glaringly big one. It's on the weekly, same as we saw with the DXY. And this is what I sort of say, that even though Aussie's not part of DXY, you can see the relationship of how they sort of work together. Oh, geez, gold's just caught a bid. It's jumped up 15 bucks. Okay, I'll get onto that. I might as well get onto that now. So yeah, we do have a little bit of sort of a negative divergence there. So certainly a close around sub 66. I think we could start to see a little bit of a deeper sort of correction when we look for it to take out 65.50 next week. Onto gold. So gold as a weekly, where it just came off its lows for the week, did it? Yep, yeah, pretty much in that. So it was actually putting in a negative week. obviously with a big wick up the top. Look, it doesn't mean anything. We've seen these things with the wick up the top, and that it hasn't sort of slowed down the beast. It is still sort of rocking along here. Did see a little bit of a completion of this little triangle. Actually, last week it sort of completed through there, just on the weekly. But if we jump down onto this 4 hour, we can see how drastically wrong we've been with these pullbacks. But again, the same sort of thing. Dribble down, little spike just to take out the highs and continue down. Now, gold is obviously still a whisker from all-time highs. And you can't sort of say, hey, look, you know what, this is it. But let's drag that to there. That's obviously the higher time frame one. Let's just have a look at where we're at with this move here. So put you here. No, doesn't work. How low time frame are we talking here? All right. Oops. I'm doing here. All and below on the 4 hour. So as you can see, it's still within the 23%. 23% actually comes right in at that sort of bounce lows at sort of 36.14. So they're obviously still like holding this thing up here, holding this thing up here. It's no turnaround, but if US dollar becomes a bit of a viable option, then there's a chance that we see a little bit of a deeper sort of correction. But these kind of little quick rallies, like as I said, what we do tick over here at 11 o'clock. Get onto a lower time frame here, you can see, look at this, bang, quick little spike up here. It doesn't mean, necessarily that we're going back up. I mean, we saw this little rally here yesterday, came off 33 up to 70, and look at how fast it came back down. Was that around the same? Yeah, that was the same time that we had that data come out, and we saw US 10 spike as well. So I think certainly if you're trading with gold and that, you need to be paying attention to those yields and that, because although you could also say, hey, look, just looking at US dollar strength, because obviously the two basically are correlated. Well, that's what we look at, the US dollar and US 10 and the DXY. But as you can see, as soon as they start to go hotter weight, it's not too bad. Yield spike, US dollar runs, gold pushes back down here. So I think while US dollar or DXY is potentially driving up, it's going to be putting pressure on these moves here. So what this has just done here, you can see a little bit of selling coming in here now. This could sort of carry back up here. We could find ourselves in a little bit of a range. If this comes up here, takes out these highs, because you got to think, if I'm trailing a stop, and I'm like short here, well, move my stop to here because that's where it said to do it, and breaks, took out the low, rallied up, it failed. Okay, so where am I going to do? I'll put my stop to here. Okay, now I'm taken out, and that's what it'll do. It'll sort of take this out. So the point is with this, if we see this come down underneath here now. If this closes underneath 33, we know that this little move here was a stop hunt, and it's most likely going to carry down a little bit further. All right, look, it's hard to say because obviously you've just had, 13 minutes and it's just spiked, what's that, $10 or something. But as I said, this is the whole setup of this. Same with this. Think about this on a large move. It's coming down, spiked up here, took out all the stops, took out your stops behind here, your stops behind here, your stops behind here, and then bang, it carried down. We saw this move in here, come in here yesterday, so that's where we know sellers are. So look, if this closes above this area, if it closes above 50, you could look up to 70, and we could find ourselves in a bigger sort of range here. But, it's early days. If we see this sort of breakdown underneath here, and close underneath 35, goes under here, all right, let's see how this one goes. As I said, if US dollar carries on, I would say this is going to allow a little bit more pressure to the downside here. But this is a little area that I'm sort of pretty interested in at the moment. A close above 52, You're looking back up to the 70s. We've got a little bit of bottom wick over here and a little bit of this kind of choppy crap through here. But I would say there's a good chance that this has just gone bang, hit the spike and then turn around. And then possibly we see a little bit lower with these movements over here. So we'll have to sort of see how this one sort of plays out. But that's just how I'm sort of viewing gold at the moment. It's incredibly bullish overall, but things can pull back. And as I said, the landscape's changed a little bit at the moment. But you know what I'm sort of looking at is to sort of see if we. Not a big fan of that, to be honest. Nor that. I don't like things on too steeper angles. That's pretty much what I'm doing. I'm not doing anything with this at the moment, but should we sort of confirm that this is a stop run, and that'll be confirmed by a close down underneath 30, then you're looking down. We've got a little bit of support down at sort of 36.12, but I would say you're probably looking 3600. So that's where I'd be kind of targeting. Into this zone over here. Oh, sorry, bang. That's the kind of sort of price target on a close underneath 30. All right, move along. We got copper here, and copper, as I said, back in its box, not really doing a great deal. Copper, look, I'll keep charting it, but you know, as you can see, you know, I mean, I suppose, like I said this yesterday, I'm not a big fan of these angle, like sort of horizontals. Yes, buy, sell kind of thing. I don't like it with, excuse me, I don't like it with diagonals. So for me, I'm still looking at these sort of kind of levels here. You know what I mean? Back on the top here, it was a sort of resistance. Chopped through it a little bit here, which the more it chops through stuff, the more it kind of negates it a little bit. But you know, it is finding support through here at the moment. I do think this has got to come back down to this. I've said this a couple of times. I think this has business to do down over here before we sort of say, hey, look, it's sort of out of this area here. I think there's too much. This, I think, has really wrecked copper market for quite some time. And finally, tick along, we got the big one. Well, big one in this sort of realm of it all. This is the yuan. So if we have a look here as well, we've got on the daily was the negative divergence. This is the interesting one here, this falling resistance. Now this one, whoops, this falling resistance here, I think is going to be the big one here. We're on that weekly support. You can't see if it's on the daily here, but that is the weekly support. A little bit of an overshoot with this rising support on the weekly here. Let's get rid of that and get rid of that. As you can see, these things, you know, I mean, it's in a perfect world, it's to the cent, but, you know, what they did is just blow out anybody that was looking at that. So we'll see the same movement with this as we do see with DXY. If DXY sort of continues its rally and pushes up higher, that's going to weigh on Aussie. It's going to, you know, this is going to, sorry, I'll start that again. If DXY flips, you're going to see this flip as well. Both of those factors and that, basically US dollar buying across the board, you're going to see that weigh on Aussie. We've got a support on a high time frame. We've got a negative divergence on the daily, which is also a decent time frame in that coming into this. You've just got to prove itself, one, above this falling resistance, and two, above 715, which is kind of like that swing high, which you can see through this area here, where we can sort of say that's the kind of area. This is where you want to see markets sort of push through to open the door to a bit of a squeeze. Because once you're coming through this area here, you've got your negative divergence, you've got your weekly time frame, you've got your swing high, you've got your falling resistance. That's a whole bunch of factors sort of saying, hey, hold on, wait, this is probably due for a little bit of a push up higher here. Yes, it's got some levels of sort of resistance to deal with along there, but I think this is the kind of thing when it takes so long to sort of turn this thing around, I don't think it's going to turn around, put in a little rally, and then sort of drop back down afterwards. It very much could. Anything's possible. But I think this is something very much to sort of keep an eye on at the moment. And we can kind of see this as a little bit of a wedge, overthrow, failed breakdown, leads to a squeeze. So it's still 715 is the magic level to get above. It's only on 711 right now, but that's definitely something to keep an eye on at the moment. But the negative divergences, I like those for the turnarounds. Higher time frame, the better. We saw the weekly on the DXY. We got the daily on the yuan. We got the weekly on the Aussie. So a lot of negative divergences into crucial levels. So that's another factor just to whack in there at the same time. So yeah, I think this US dollar could US dollar rebalancing. I'm not going to say it's a crazy buying spree because it's if we get the job numbers and the job numbers come right down and inflation stays persistent, that's your green light. US dollar going. But till we see those job numbers sort of stabilize a little bit and inflation stay persistent, I think the best we hope for is a little bit of a rebalancing, which means we can get a good, decent sort of, short-term, medium-term trade out of it. Doesn't mean we can't get sort of a week and a half, 2 weeks of US dollar strength out of that move. It just sort of means that you're not going to be seeing the 3 months recoveries necessarily till we get the secret source, and the secret source is job numbers down, inflation persistent, because we know what the response from the Fed would be given those sort of that right combination of data. All right, that's it from me.